Hey everyone, welcome back. I truly believe that XRP could be entering what many people would call a super cycle. And before you think that's just hype, I want you to listen to something that Binance founder CZ has said multiple times over the past few months. During an interview, he was asked whether he still believed that 2026 could become a crypto supercycle. The interviewer pointed out that the market wasn't looking very exciting and that prices had struggled throughout the year. CZ's response was interesting. He admitted that he doesn't like making predictions because nobody can accurately predict the future. He reminded everyone that Bitcoin had already moved from around $60,000 to $80,000 and then back again. Some people would call that a bear market or even another crypto winter. But then he made one thing very clear. He said that crypto is not dying. The industry continues to grow, and he still believes that a supercycle will eventually come. The only thing he doesn't know is exactly when. Now, whenever I hear that, I immediately think about XRP, because while most people frame everything around Bitcoin, I believe the real story could be XRP itself. And here's why. A few months earlier, CZ was asked another question about where Bitcoin could eventually go. Again, he explained that he doesn't trade daily. He simply holds his assets because years ago he tried timing the market and admitted that he lost money doing it. His philosophy today is simple. He's a builder, not a trader. When asked where Bitcoin could be in the future, he said something very important. He explained that if you're talking about tomorrow or next week, nobody knows. But if you're looking years into the future, then his outlook becomes much more optimistic. Once again, he used the phrase supercycle. That brings us back to XRP. If we're talking about a possible XRP supercycle, then we have to remember what happened before. Let's go back to 2017 and early 2018. Those who were in the market at that time remember what XRP actually did. Depending on which data source you use, XRP appreciated somewhere between roughly 36,000% and 45,000% during that run. Those numbers sound unbelievable today, but they happened. I was there and many of you were too. Now compare that period to today. The crypto market back then was dramatically smaller than it is now. Another interesting point comes from Matt Hogan, who recently discussed where the industry is heading. He explained that the next generation of winning crypto assets may not be the same as the previous generation. In other words, the market is maturing. He also emphasized something that many people have been waiting for: regulatory clarity. According to him, once clearer regulations arrive, the industry may turn the page and enter an entirely new phase. I completely agree, because regulation doesn't just create rules. It separates serious projects from everything else. Years ago, Brad Garlinghouse made a statement that many people ignored at the time. He said that he believed 99% of cryptocurrencies would eventually go to zero, while only a small percentage would survive because they solve real problems for real customers at scale. Think about that. He wasn't saying crypto would fail, he was saying that most projects don't provide meaningful utility. Only those with real-world use cases will survive over the long term. Charles Hoskinson expressed a very similar idea, but in a different way. He was asked whether the world really needs thousands upon thousands of different cryptocurrencies. His answer was fascinating. He compared today's crypto industry to the early days of the internet. When a new technology emerges, thousands of ideas appear. Everyone wants to build something. But eventually, many disappear while only a handful become dominant standards. He described it almost like nature itself. Thousands of flowers bloom, but not every flower survives the winter. Eventually, the market consolidates. Strong projects remain, weak projects disappear. And that's exactly why so many investors believe utility will matter far more than hype in the years ahead. Hoskinson also pointed out that crypto isn't simply about money anymore. It's becoming infrastructure. It could support social networks, artificial intelligence, supply chains, medical records, and countless other industries. In other words, blockchain isn't just creating another financial product, it's helping redesign the digital backbone of society. And if that's true, then the value proposition becomes much larger than many people currently realize. That's why discussions about an XRP supercycle aren't simply based on price speculation. They're based on the belief that the technology itself could become part of the infrastructure powering the future financial system. And once you start looking at it from that perspective, today's market may look very different than it does to the average investor. And when you look back at XRP's previous run, the numbers become even more interesting. During the 2017 to 2018 cycle, XRP climbed to around $3.80, and depending on the calculation, its return was somewhere between 36,000% and nearly 50,000%. The important thing to remember is the size of the crypto market at that time. The entire industry was worth only around $700 to $800 billion. Now compare that to today. The crypto market is already multiple times larger than it was back then, and almost every major institution talking about blockchain believes that trillions, perhaps even tens of trillions of dollars in value, will eventually move on to digital networks through tokenization and digital assets. So here's the question. If XRP was capable of producing that kind of performance in a much smaller market, why do so many people automatically assume that strong future growth is impossible in a much larger market? Many analysts dismiss the idea immediately because the numbers sound too big, but supporters argue that the financial system itself is changing. It's no longer just about cryptocurrencies being traded between retail investors. It's about infrastructure, tokenization, cross-border payments, and institutional adoption. Another major topic is regulatory clarity. For years, one of Bitcoin's biggest advantages was that regulators generally treated it as a commodity. Meanwhile, many other digital assets operated under uncertainty. Now, with legislation and clearer frameworks being discussed, many believe the industry is entering a completely different phase. Supporters argue that once projects with real utility are separated from thousands of speculative tokens, capital may begin flowing toward the assets that actually solve real-world problems. And that's exactly why many people continue watching XRP so closely. The belief is that blockchain networks like the XRP ledger are designed for utility, not simply speculation. If financial institutions begin tokenizing assets and moving value across blockchain infrastructure, then networks built for speed and efficiency could become increasingly important. Another fascinating theory connects all of this to the early days of PayPal. Many people don't realize that PayPal originally had ambitions far beyond becoming an online payment processor. The long-term vision discussed by some of its founders involved creating a new global digital currency system. That vision never fully materialized within PayPal itself. However, some supporters believe that Ripple and XRP represent a continuation of that original idea. They point to the connections between early fintech pioneers, payment innovators, and investors who appeared around both PayPal and Ripple during their early stages. Whether those connections ultimately prove meaningful or not, they remain one of the most discussed topics within the XRP community. Even Peter Thiel once spoke about how PayPal explored the concept of creating a new world currency before ultimately focusing on building a successful payment system instead. Supporters argue that XRP was designed with a much larger objective in mind: a global bridge asset capable of facilitating value movement across different financial systems. Whether that vision becomes reality remains to be seen, but it explains why so many long-term holders continue to focus on utility rather than short-term price action. The discussion doesn't stop there. Ripple's own ecosystem continues expanding through products such as RLUSD. According to the presentation discussed, the stablecoin market is expected to become an enormous industry, and Ripple entered that space not simply to launch another token, but to solve customer needs and strengthen its payment infrastructure. The idea is straightforward. Compliant stablecoins can improve on- and off-ramps while also supporting cross-border payment solutions. Supporters view this as another piece of a much larger strategy rather than an isolated product launch. When all of these developments are viewed together, regulatory progress, tokenization, institutional interest, payment infrastructure, and expanding blockchain adoption, the argument for a potential XRP supercycle becomes easier to understand from the perspective of long-term believers. Of course, none of this guarantees future prices, and no one can predict exactly when markets will move. Cryptocurrency remains a highly volatile asset class, and every investment carries risk. But history has shown that major technological shifts often look impossible until they happen. For many XRP supporters, today's uncertainty is simply part of that journey. They believe the real story is not what happened yesterday, but what global finance could look like tomorrow. As always, this video is for educational and informational purposes only, and should not be considered financial or investment advice. Always conduct your own research before making any investment decisions. If you enjoyed this analysis and want more premium XRP news, blockchain insights, and institutional updates, make sure to subscribe, turn on notifications, and stay connected with XRP Update. Thanks for watching, and I'll see you in the next video.